Good afternoon, everyone, and welcome to Stock Market Today for Tuesday, January 14th. It's Alissa Coram here, and we had a mixed day with the indexes still seeking some direction. And here to break everything down with me is my colleague, Ed Carson. Ed, great to see you as always.
Yeah, great to see you, Ali. I do want to take a look at three stocks. C, it was a rocky C out there in the market, but C did pretty well. Howmet Aerospace and Argan.
All right. Well, we will check in on those stocks. But first, as always, let's analyze the major indexes. So the NASDAQ closing down 0.2% after an attempted bounce at the start of the day. Meanwhile, the S&P 500 closed slightly positive today, up about 0.1%, but giving back its earlier gains. The Dow today up about 0.5%, but still a lot of damage out there. And then the Russell 2000 was the strongest of the bunch today. But talk about damage. Small caps definitely have been quite damaged, Ed, even with the Russell 2000's gain of about 1% in today's session. And we can also talk about breadth as well. But let's start with your take on the action for the NASDAQ today.
Yeah, not great. I mean, yesterday we had this intraday bounce, and you could sort of like, well, maybe we're going to start a bounce here. And I mean, we didn't undercut Monday's lows, but at the end of today, we're down for 5 straight days. I mean, when it comes down to it, we hit resistance sort of getting toward the 50-day line. The 21-day line seems almost inevitably headed to go below the 50-day, maybe in 2 days or so, barring a really dramatic rebound. So, I mean, when you're below the 21-day line, when you're below the 50-day line, not a whole lot of good things are happening. And I think that the last couple of days are reasons why investors should be cautious about being excited about the first glimmer of hope. Yeah, and that's just it's not that kind of market right now.
Right. I totally agree, Ed. And I think we were right to start getting defensive in mid-December and noted how when you get that kind of break, you're likely to see some volatility for some time after that. That's exactly what we're seeing. And I think we, as a team, got more defensive last week as well. So I love the key levels that you highlighted. Just one more here for the NASDAQ. Sometimes round numbers can be psychological areas. So even though we've had 2 days of intraday undercuts of 19,000, we've closed above that level. I do think that the reversal low from Monday is an even more significant level if we were to close below that. But who knows, maybe 19,000 can be that floor of support. That's what we've seen only for the last 2 days, but not going to get excited at all, like you said, until we see further progress to the upside. And let's take a look at the S&P 500. 5,800 is a level that I'm watching, and that's a round number that we've been able to close above here, Ed. But again, we want to see more progress. And like you mentioned for the NASDAQ, we're still seeing the 21-day above the 50-day, could roll over soon. Well, that already happened for the S&P.
Yeah, that power trend is over. That's a mark there. That was not a good sign. And one reason why the market struggles is because of the PPI. It looked like we're going to get the PPI inflation data looked good, and it was good for that index, but there was data within that suggested that the CPI, which we're having tomorrow, won't be as positive. Airfares and some other things that you would pass through. So the 10-year Treasury didn't really improve at all. It came down 1 basis point, but look, after that huge move, it wasn't like what maybe the stock market was hoping for. But yeah, I mean, if you're buying stocks right now, and the one thing is that, we're looking at these indexes and we'll look at some stocks and they're looking good. But if you're buying stocks in this environment, the problem is that you're not just buying a stock hoping that stock goes up, but you're almost hoping that the market changes direction. And that's a big bet. I mean, there's a reason why we buy in uptrends, because things will probably trend up. I mean, maybe this is the moment that 19,000 is the bottom and we're going to rally, but you just don't know. And so
Right.
it's just hard. With some exceptions, most stocks are going to fall. So even though there's some interesting names out there, there's some intriguing action. investors should be very cautious about things.
Hmm. And I think that the silver lining is that corrections do create new buying opportunities. If you look back to last April, I mean, we did spend a little time below the 50-day line, and even if you waited until the Nasdaq got back above the 50-day, you still had a number of weeks of a great trending market. It was a little trickier over the summer, of course, but we did course correct in mid-September, and that again too, if you used even just the 50-day as your signal or some sort of follow through day type action, that is something that is really helpful. So who knows, maybe we'll get something similar down the road, but a prolonged chop is not out of the question either. So again, let's let the market prove it to us first, right, Ed?
Absolutely.
Okay. Next on our list, let's take a look at that breadth factor out there. So we want to compare SPY, the S&P 500, with RSP. This is the equal weighted S&P 500 ETF. And it was up 0.8% today, Ed. So definitely outpacing the S&P's gain of just 0.1%. So perhaps adding to that vibe, as you said, underneath the surface, where there are a number of stocks that are looking pretty decent or even strong out there.
Yeah, there might be some change of leadership. Some of the big names out there were reversing lower today or struggling today. Uh, the problem is with RSP and with IWM and with QQEW is that they're well below their 50-day lines. I mean, they're bouncing at the 200-day line. They're finding support at like at a last ditch kind of spot, but they've got a long way to go before you'd feel comfortable about these indexes really. So there was strength here, and it'd be nice of it, but we need to see a lot more of it from these areas. But it's nice to see things aren't falling apart. I mean, again, it's sort of choppy. We're sort of downtrending, but it isn't like this free fall market. I mean, the bulls are still showing some fight. They aren't really winning a whole lot, or at best having mixed. But yeah, yeah, it's not one to walk away, market to walk away from, but it's not necessarily a market to do a whole lot with until things get
Mhm.
better.
Yeah, we need more evidence. All right, well, let's take a look at some stocks. Here's a look at C ticker SE, and it was up 3.3% today. Volume was roughly average, but some key technical action here, Ed, with this stock getting back above not just its 50-day line, but really those converging moving averages. So the 21-day line as well here. So I would say this is definitely a notable move here today from a stock
Yeah,
that had a really nice run in 2024.
yeah, and so this one, as you say, breaking those things, is sort of breaking a trend line, getting above short-term highs. The volume was picked up as it sort of in the, during the day, it was below average at one point. And so it looks like it got just above average for the day. So it was okay, but not, but this one has some really strong fundamentals. I mean, it's a turnaround for sure after losses for several years,
Mhm.
really strong growth seen. I mean, even in deep into 2025 when the comparisons get tougher, still looks like pretty strong growth. So it's consolidated it here. Maybe it can make another run. Some of the stocks that we've been seeing, it's like they're already getting extended from 50-day lines. This one is not. Again, do you take a bet on a foreign e-commerce stock in the middle of this market? I mean, if the market
Mhm.
does okay, this one might do fine, but this is also one that can sell off pretty quickly. So,
Right.
with definitely something to be watching out on that front.
Mhm. Right. And that's a good point. And something to reiterate that we talked about on IBD Live, where we tend to, when the market conditions aren't favorable, is that if you are going to play, if you are going to dabble and risk your money, then make sure that you are definitely managing your risk. We always want to manage risk no matter what market conditions are, but especially when you have the wind at your face with the indexes looking weak. Maybe that means a smaller position size, or maybe that means cutting your losses quicker at using a really tight stop. So, those are just some of the things that you can do to really help make sure that you aren't getting too chopped up in this type of market.
Yeah, those are really good ideas.
Okay, let's move on and take a look at HWM. This is Howmet Aerospace, and a strong gain here today for this stock, up nearly 4%. We did manage to see some above average volume here behind the move, and this was our stock of the day today, Ed.
Yeah, and so this one sort of been rebounding the past couple of days from the 50-day line, got above short-term levels. So it certainly seemed like it was actionable. The relative strength line is a new high, and if you look on a weekly, there is a base, I believe, on this, and so you're going to see that blue dot. So it's a blue dot either way. Just not going to show it on a daily because it wasn't quite long enough yet. But early action, actionable here. This is one of the top performers last year, especially when you exclude some of the AI plays. That relative strength has been really strong. It makes these fairly shallow, fairly modest bases, along the way, and not, some stair steppers, they come in, they come back down into the prior base, but this one makes real moves and then finds
Mhm.
support. So it's been, if people have been able to grab onto it, certainly people could have had it for a long-term hold. The earnings growth has been really strong. It's supposed to be a little slower next year or this year, but and earnings are coming up in a couple of weeks, so that is one thing to note. But
Mhm.
uh, it does feel like a lot tech is struggling a little bit more than other areas, and this is a name that has strong growth and strong technicals right now.
Yeah, it really does. And it is now back above the levels that it reached after a strong earnings report in November and inching closer to its prior high, just above that 120 level. And last but not least, let's check out AGX. This is in the building heavy construction group, up 7.7% today, Ed, with a lot of volume behind the move today, a blue dot here. And Argan wasn't alone today.
No, there's a lot of stocks in this group, and this group is doing very well. It was ranked 13th before today. I can imagine if you that's going to get updated if that's in the near future. So looking really strong. This sector is doing well. There's a lot of reasons to like heavy construction. There's a lot of infrastructure and a lot of different industries that are going well. So you can look at that growth. That earnings growth has been tremendous. That revenue growth has been tremendous. I will note that the next fiscal year it's supposed to slow down quite a bit. So that is something to know. Now, will those forecasts be high? So that is something that in the second half of next year. So that is something to note, but the
Mhm.
fundamentals have been great, really strong action. You're sidestepping the tech sector, which is
Hmm.
just seems to be,
Mhm.
more in a correction type mode or something close to it. But you're not sacrificing anything by going with this name.
Okay, so a breakout here today from a cut base with a buy point just above 165. Today's closing range was right at 50%. So it did come off highs, but still right in the half of the range. And there was a little bit of a gap too. So
Yeah.
even higher, I guess, if you consider the true range there, Ed. But if traders chased the strength here today for anything really, because a lot of stocks came off their highs by the end of the day. Talk about that, buying breakouts again with a shaky market.
Yeah, that makes it tough. And they probably would have wanted to get it maybe as it got above highs from last week, like Friday. Treat that as almost like a little handle, not that it was a handle, uh, because it was also getting extended versus the 50-day line. It's just tough. Yeah, buying when it gets up there, you just have to consider that you just can't necessarily trust the market to keep on going up, especially with all these resistance levels. I mean, if the Nasdaq makes another gain, not that that necessarily is the what's going to make Argan move, but you can see there's the 50-day line, there's the 21-day line, there's the high from a couple weeks ago. There's just a lot of levels that you just sort of have to you get over the first hurdle, it doesn't mean you're going to get over the second or third. So a lot of places where this could stall out. I think that investors just have to be, I like see things like C limited where you're getting closer to the 50-day line. It just feels like there's a place
Hmm.
if it doesn't work, like if it went underneath today's low, you'd feel a little bit like you could be cutting it if you really wanted to be, I wouldn't even say Monday's low. That's getting at this point, that'd be in like 6, 7% loss. But I think that's safer than going high, going up there
Hmm.
because there's just the risk that it could come back. Because yeah, with if you bought AGX, at the highs of the day, when is it wrong? When is it wrong? You're going to be down 8% by the time you're wrong,
Hmm.
and that's not a good situation. And that's unfortunately too often is that happening.
Hmm. Something to keep in mind. All right. Well, thank you so much, Ed. As always, we love getting your perspective.
Thank you very much.
And thanks everyone for tuning in. That is it from us for today. But we do have our weekly Swing Trader status update show coming up live at 5 p.m. Eastern with our Swing Trader crew. So don't miss it. That's also live on YouTube. And we post it to investors.com/videos after the fact as well, just like this show. So the Swing Trader crew will see you then coming up here shortly. And then we've got your back tomorrow morning on IBD Live, investors.com/IBD Live for all the details on that. We'll see you there. And then we'll also see you right back here tomorrow after the close.